welcome to Trading with Fear. So in this episode, I'll be going over the BRMA's trade recap on Friday, as well as my monthly recap of September. So this right here is a chart of BRMA, and what I was looking at was a potential gap and crap reversal on this one. So pretty much had a gap up from here to about there. So it looks like about a 32% gap up on the day. And so my thought process was that, you know, it was up a little bit. I don't really know why it was gapping, but there was just a lot of volume on this chart. You can see at the time there's probably around like 30-40 million. So at the time, early in the morning, this was pretty much the heavy volume chart of the $5 plus mark. As far as the stocks I was watching, I did go through the OTCs and other charts, and they just weren't really looking the way that I liked them to. There wasn't any pattern. So looking at this chart, I thought perhaps there was a potential that I could actually go up. And it is a lower float stock. You can see there's a couple of times where it tried to retest, and it just moved so quickly. My thought process on this one was aiming for about a 30%. So, zooming out a little bit, my first sell would have been pretty much as soon as it broke out above here, about 675 would be my first 15% scale out with, and then my next one would have been around the 775, somewhere around there, if I remember right. But it just didn't really do anything. The max profit I was up was around $11. Just wasn't really worth it to take whatever the profit was. And you can kind of see it's kind of making this triangle pattern. It's still holding up. With what's been going on in the markets, with less volatility, this is a gap and crap. So near the end of the day, after hours, I let it work. I thought perhaps we could actually do something after hours. A lot of the stock squeezes have been happening, pre-market and also after hours time. So I was like, okay, well, it still has a good chart. I have a good entry. My risk was down here at like a 552, and I did record this trade, but just because there was no price action, I didn't really think it was worth uploading, which is one of the reasons why I'm doing a recap on it now. And with it kind of just consolidating, going sideways, even though the chart's still good, it never came down to my risk. My biggest concern was that coming into Monday, that it could potentially come down, and bracket orders don't work pre-market or after hours. They only work during market time. So I was thinking, with the weekend coming up, the risk of it going down was greater than I was going to accept. So I ended up cutting the trade right there at $5.98, and I just took it off. There just wasn't really much of a volume after hours. So I ended up taking a small profit on that, nothing really big, $3.57. So I ended the day as a negative $3.34. So easily, something that I can come back from. I did end up taking a small loss on a trade that I'm going to be going into. So this right here is MDIA. So this right here is the trade recap of September. The last trade that I took in September was MDIA. And one of the reasons why I was looking at it was the long-term chart. It's been slowly consolidating and squeezing up tighter and tighter towards that breakout level. I had pretty decent volume here, about 3 million. In the past, it's had a little bit of volume as well. It is a former runner, and it's potentially they could run again. And because it's making this nice kind of curling action, this squeezing action towards this area, I decided to go ahead and attempt this trade. So right here, it ends up forming a wedge pattern or ABCD pattern. So you can see the lows right here. Starts to consolidate and work its way up towards that range. And so I ended up taking a position right here at 1128. And what I was aiming for is to scale out of the trade first at 15% and 30%. And it just kind of never worked. I was anticipating going up and, trying to retest some of these levels, at least, the 13s, 14s, and maybe even up a little bit higher. And so I swung it overnight, ended up hitting my risk level down here. So I'm taking a small loss of about 5%. So a loss of $6.84. What I try to do is record every position I take and upload it on YouTube. If they do take longer for them to work, I generally won't record them. Some of the ones that I've recorded back in September was, days hold. So I was going to record those and kind of shorten down the time frame, but with a lot of sideways action, I just thought it'd be kind of boring to do that. 9 hours or so of a trade. it's just too long for me to even want to watch myself. So I can understand why other people wouldn't want to watch that. So I try to keep the videos that I upload on YouTube to be short and generally just that day's action. So this right here is NCNA. And what I was thinking of was another gap and crap reversal, had a nice gap up in the morning and was kind of holding this range. What I was looking to do was actually buy it here and see if it was going to try to reverse. There was a kind of a trend I thought perhaps it will hold here. One of the things that I should have been more cautious of or more wary of was having it kind of ramp up, pull back, and slowly start to curl back up again. That would be more of a conviction on the long side. Another thing that I didn't realize until after analyzing it, it doesn't really have a history of gapping up and holding those gains. It has a history of kind of going down. So that's just being more mindful of what the overall pattern is, what the overall chart is, and that's fine. Cut my loss, got out, took a 6.65 loss, percent loss, so $8.78. Now this particular trade, I did actually give it a little bit wide over risk, just to see if it had a potential of working, and it just didn't, so that's fine. GoGo is also a trade that I was taking. I did record this one as well, and I ended up buying it down here. Had a nice gap up, again a gap crack reversal. So I had a gap up, I had a nice clean breakout over 14. And so on the short-term picture, I saw a gap up, kind of pull back. And so I took a position here, thinking that there's a potential of it going up higher. And so I kind of placed my risk at a 5% risk. I just kind of let this go through my bracket orders all day long. I was scaling out of this trade, so 15 and 30%. One of the things that I started doing differently this month compared to August was on listed stocks, because there's no commissions, I wanted to actually pay myself as the market makes money available to me. In the past, I used to scale out of trades. I'd buy into the trade one time and take small portions of the move as it's going towards my big goal. I started doing that back in January, and then I slowly started getting away from it, got back into it a little bit in April, got away from it again in May, and got away from it again in June and July. I didn't do it as well. So in August, I went back and tried to analyze my trades and try to figure out what was different this month in August or in September that I wasn't doing, that I was doing in the past. And one of the things that I started noticing was that even though I'm taking bigger portions of the move, if it does fail, if it gets up to 25% and I'm trying to take 30% as a mechanical trader, if it comes all the way back down and gets me stopped out, there's a portion of that move that I could have taken profits from, and I never did. So what I started doing was going back to the habit of scaling in and out, or to scale out of trades and not into trades. I'll buy my full position in one trade, then I'll scale out of it as the market makes money available. So on a 30% target that I'm trying to aim for, I'll end up scaling out at 15% and the rest off at 30%. So that way, if it does go up to 15%, let's say it goes up to 20, 25, comes back down and it hits my risk, I still take money on the move no matter what. So that way, it almost guarantees me something as long as it hits those first levels. So this trade right here, it was uptrending. It was going sideways, kind of uptrended, and during this day right here, which was Thursday, it had this nice pattern, kind of broke down. And my biggest concern was that the trade wasn't going to work, that it was going to end up just kind of breaking down over time, and it was just going to fail. And so I ended up cutting the rest of the position off right here and took a small profit on that one. And that second part of the trade was $23.20 profit, so 19.67, so almost 20%. And if I would have actually, kind of paid attention to the overall direction of the move, it was just coming back down and kind of making another lower high based off of where the overall direction was. And you can see that it was kind of staying within this trend line that I drew here. Now, not all of them are going to be very clean. And sometimes when you're in a trade, the price actually does kind of make it a little bit complicated to actually stay in a trade longer, just because there was that fear of the market taking your money away. What I also ended up doing is bringing slowly over time my bracket orders up to try to protect whatever money I had based off of that one move. I'm trying to play around with that. In the past, I never really did that. I just kind of, if it came back down, I'll just take that small position on a loss. But this time what I want to do is actually make sure that I'm taking something out of the trade regardless of what direction it's going. So I ended up bringing up my stop loss. Originally my stop loss was around here at 1648, 1650 level. I brought it up on that day, on this day right here, which if I would have left it there, it would have never came down to that stop loss, and I would have still gone out with about a 13 or 14% profit on the rest of the shares. And my sell target was at 1917. And on Friday, it did actually reach that level sometime early in the morning. So the trade worked out for a 30% move. I just didn't have the patience to hold on to it. And that's one of the things that personally I have a problem with when it comes down to swing trading. With a small account, trying to swing trade, that's a bit of my capital that's been tied up in that trade. And even though this trade would have worked out, it kind of gives me enough conviction to say, hey, I was on the right track. Breakout pattern did work. I would have been able to get it 30%. On Friday, it looks like I tried to get it to 21, and then pulled right back under and started consolidating around the $19, $20 mark. Or it looks like the $19 mark. So ultimately, the trade would have worked. As my account starts to grow bigger, I will have more conviction to hold on to these swing trades until they reach my target price. But I'm pretty proud of how I took the trade. The only mistake that I did was anticipating it to come down and hit my risk, which it never would have done that. But also at the same time, I was just bored holding on to the trade. But overall, not a bad trade. I ended up taking the first sell was at 15.06%. The next one was at 19.7 or 67%. So a combined total of 96 cents. And you can see here, I only had 16 shares. So 16 shares selling out twice, making $40. That's not too bad at all. Aagc was another one that I ended up trading, and so kind of a similar plan. I was looking for a gap and crap reversal on it, and what I was back on the 27th, which was the Monday that just passed, so it was just this Monday. I'm still having problems with the consistency of sleep. So on Monday, I actually never fell asleep. I ended up just staying awake for 24 hours trying to reset my sleep schedule. And it's something I may have to do multiple times. It's kind of the joys of being a new parent and having a baby and all that stuff and trying to trade and all the stuff that I need to get done during the day gets pushed off at night. So I end up staying awake at night. And no matter what I try to do, that's just the way things are. So I may have to get used to staying awake every now and again, 24 hours just to reset my sleep schedule. So I ended up seeing this pre-market had a pretty heavy volume. I ended up taking the trade, and I was looking for to scale out, 15 and 30% again. And looking back at the chart, it does have a history of running. You can see these pretty big runs up right here. And so, some run here, some run here. So I thought perhaps it was had an ability to, try to test it again. It also had a breakout level. And the float on this one was actually somewhat low as well, around 30,000, and it had just a lot of volume trading on that day. Pre-market volume was pretty high, so I thought I'd just take an opportunity. I was buying it pretty early, so my risk to reward level was pretty good. So what ended up happening is I just kind of let it work. As long as it was in between my bracket orders, I was fine holding on to it. There's a part of where, to me, it looked like it was just channeling in between this area, and if it would have stayed within that channel after hours, I wouldn't have had any problems holding on to it overnight. But as soon as it ended up breaking down and started looking weak after hours, that's when I ended up cutting it down here. And from the long-term chart, you can kind of see how it broke down and faded. And later on, it did actually reclaim that 340s level and is channeling again. So this is something I'm going to be keeping on watch. It's kind of making this pattern that I do like to trade a lot. So it's potential that it may have potential in the later on sometime somewhere else or sometime down the line. But as far as that trade, I ended up cutting it after hours just because it was starting to break down. I didn't really think that the risk to reward on that was there anymore. So on that one, I did take a small profit of $4.68 from the 39 shares that I had. So one of the biggest difference between September and August and July is I'm a little bit more, aware of risk to reward. Am I willing to hold something overnight if there's a potential that the risk is greater that it's going to come down versus holding it if the chart's still intact? That type of a scenario. So GEVO or GEV, this is also another trade that I ended up taking. So I ended up buying it right here. I can see these like kind of higher lows, so I ended up buying it here. My average buy price was $8.22. So right here, and I was risking about 5%. So if it came down below, pretty much around this area right here, I was willing to cut the trade. And the first day, it was uptrending pretty nicely. It got as high as 15%. And I thought, with the overall trend, the overall direction of the move, I was kind of expecting a little bit of a gap up. And I didn't, at this point, start scaling up the trades until a little bit later on. One of the first trades that I started doing that again was on GoGo. And that was because I was going back and analyzing trades and trying to determine what I was doing in the past. I was making me a lot more consistent, even if it was bringing in just a little bit of money here and there. That's something I want to get back and doing. And so if I would have scaled out of the trade, that 15% that it got up to after hours, I would have easily been able to take that. And if I would have cut the trade here, like I did, I still would have had a profit. But I ended up taking off at 833, and so that was a 1.34% profit, so $3.19, because I figured if it wasn't gapping up, if it wasn't doing anything, if it wasn't turning from red to green, the chances of that happening just wasn't really there. I didn't want to risk any sort of gap down the next day, which ended up happening, so I just cut it. HRAA is an OTCs trade. I did end up recording this one and also took off the recording just because it didn't really do much of anything again. So I ended up buying it here, set an alert for a breakout, got the breakout alert, bought it pretty quickly at pretty much 37 cents. And right here, so I ended up buying it at 37 cents. My goal on this one was about a 40% profit. So from 37, let's just say from here, when it got up to here, I was up about 20%. When I got up to its highs, just say from here because it's pretty much close enough. So when I ended up getting to its highs, that was a high of about 40%. So I would have easily gotten that 40% based off the data, based off the chart. It was just more lines of time frame. Now, this never came down to my risk. It actually never, even came close to where I should have cut it. My risk was down here, pretty much a breakout fell, and it was basically just below this area. So at 37, I think I was risking around 339 or something like that. I was risking about 7%. On OTC trades, I do end up risking just a little bit more than that 5%, just because they have a tendency of moving a little bit erratic, and it just allows me to stay in the trend a lot longer. So based off this chart, it would never actually came down and got me out of the trade. It just was one of those ones that I had to hold on for a long time. One of the reasons why I ended up coming a little bit early was because of this trade right here, and this is a PSRU. So I ended up getting a breakout alert on this one on the day right here, which would have been pretty much on the 22nd. And so I ended up getting the breakout, bought the breakout, had a really good entry on that breakout. And right there, now this red line is where my risk level is at. So I ended up buying it here at pretty much 90 cents. My risk was down here, so that's about 7%. And I was looking for a 40% sell target. And when it was going up, I was looking for a 60% sell target. When it was going up, somewhere down the line, I ended up changing my sell order to be up here at the 15. For whatever reason, I thought maybe you can get up to 65 or 66% or whatever the case was. And that one little error ended up making me lose an entire move. And, it missed my sell target of 0.015, 0.5%. And that's really frustrating where, I was really correct on the trade. It was ended up going up. I had a great entry, had a great risk reward, got the alert, bought the breakout. they just never reached that end goal. And the data that I have for the breakouts never said it would actually reach that level. Because of this one trade where I made a trading error, which is one of the reasons why I ended up cutting HR AA early, was because I thought maybe I made the same mistake on that one, so I just cut the loss and got out. On HRAA, I did get out with a $1.78 profit, so it would have been a little bit bigger. But PSRU kind of taught me another valuable lesson that I'll go into on my last trade. I'm going to show you. SPIR. So this was also an ABCD pattern right here, and it just ended up failing. So it had this, run up in the morning, pulled back, consolidated, ran up again, pulled back, consolidated. And I can see it kind of like doing this little curling up action. I thought there was a potential that we can break out, continue running. And it also just failed. So I gave the rest of the, I bought in at 17.10. So I was risking another 5%. So it's at 1578. So right there. So that's about 7.70%. And so I think I was also giving a little bit wide of a risk, because where I bought it at and where the low was down here, I did. I ended up giving this one just a little bit wide of a risk. With the position size of 8 shares, it was kind of an acceptable thing. So I did take a 7.72 loss on that. I do remember that. So about $10.56 on that trade. One of the things that I should have done, in hindsight, was if I was buying here in this area, my risk should have been, pretty much right here, or just right here in the, $16 range. And if it came down through there, the chances of it not coming back is pretty high. So the probabilities will say, hey, breaks below 16, chart's dead, and just get out. I did end up, for whatever reason, getting a little bit wider of a risk. And I think it's just because I ended up buying a little bit higher. And it also comes down to, like, would you be willing to accept, the cost of the trade? And on this chart, I was kind of, risking, as far as my overall capital wise goes, a little bit more than probably I should have. So that's definitely a lesson, to kind of reflect on that, where I'm buying it at, where the risk should be at, especially on a chart like this. The risk should be around here at 16 on ABCD pattern. So I ended up buying into IRNT/WS, so the warrants of IRNT. So right here, it had this big, massive run up, and I was trading it in the past. And here's a sell order right here for it, and I think I traded it. Yeah, I traded it twice in September. I'll go over that trade here in a moment. So it already had this big run up right here, pulled back, kind of retested again, and for whatever reason, I decided to go ahead and see if I can buy it again, see if it's going to have another push. So you can see here how it had this huge push right here, pulled back. I thought perhaps it would actually consolidate for like a day or two and try to re-squeeze out. I do know that this particular trade was being pumped on Twitter, so that's why I thought, well, perhaps it can actually be, a good trade to actually hold on to it, swing it, and see if we can retest those levels. And when the volume just never really came in, I ended up cutting the trade about at $7.69 and then cutting at $7.24. I did end up buying it again at $7.69, but my original price was $7.90. And I'm buying one share. I think that was a mistake, buying one share at $7.69, and just ended up cutting it a couple of days later, which ultimately was the best thing. I just thought there was, no action. It's starting to break trend. This is the backside of the move. This was the front side, and the bounce has already happened here on this day. And so when I started looking at it more clearly, I just realized I made a mistake. So in that particular trade, I did take an $8.35 loss, and $24.42. Now, half of September I was using bracket orders. Half September I was following my strategy. The other half September I wasn't. So there's a big contrast between the way that I was trading in the beginning versus the way that I was trading in the second half of September. And here in a moment, I'll be able to show you the clear contrast of my mentality and some of the ways that I was actually able to help overcome some of those challenges. So here's the screenshot that I took of that HLBZ trade. I was trying to pull it up on Thinkorswim, but the chart just didn't look right, and I didn't know exactly what I was entering into, so I just wanted to make sure that you guys got the right information. So I ended up seeing this gap up in the morning. It was also had a Brooklyn breakout, started coming up, and I was looking at this particular trade as a gap and crap reversal. So I'm buying it up here at 1847. My risk was just below here, so on the chart that's about 5%. And with the market conditions as well as the data that I was collecting, the gap and crap reversals was showing a potential of about 40%. I wanted to kind of meet more in the middle. Well, I wanted to meet somewhere and try to take as much of the move as I can without going too much overboard of the risk. At this time, I still wasn't scaling out of trade, so I should have been aiming for 15 and 30 again. But I ended up selling it up here at 1493, or sorry, 2493 for a 35% gain. So this one right here. So INDP was a good trade. It actually had multiple different levels of where you can enter and exit from. I ended up buying it at 1950. So I noticed that it already had this kind of trending upwards here. Missed the breakout over that. When it started coming up and started making higher lows and higher lows, I thought it was the potential of an ABCD pattern, so I'm taking a position in 1950. My risk was down here. To me, that risk reward was actually pretty good. I'm risking about 50 cents, which is about 5%. The potential to make 30%. So that's what I ended up doing is I took a 30% to move, so at 25.33, so right up here. It did go a little bit higher, which is fine, 30%. I think that the total potential amount of this trade would have been about 40% of the move. So it still falls within the probabilities that I have for that particular trade, that particular pattern on the ABCD pattern or the wedge pattern, which is 40%. So now if you're, new to following me, or if you're new to watching the videos, the data that I collect, I don't generally go for the high end part of the data. I kind of go just a little bit below it, just make sure that I'm taking some portion of the move, even though it's a pretty decent amount as far as percent-wise goes. Another trade that I ended up taking right here. So I had kind of a gap up again. Was looking at it as a gap up in conjunction with the breakout pattern. So it started kind of having this nice upwards trend in the morning, pulled back, started making a lower high, consolidated, pulled back, and got a lower high again, and started slowly squeezing up. So I thought if I enter in here, my risk reward would be down here. So I was risking, pretty tight on this trade, but it started making this nice trend later on the day. And on this particular trade, I ended up taking it at 16.72%. Early on in September, what I was looking to do was become consistent. I was coming off of a 6-week losing streak, so I want to take some sort of profits, trying to get consistently in the habit of taking money. Aagc was another trade that I ended up taking. So back on the 8th of September, I ended up taking a trade on Aagc. My thought process was that it's kind of gapped up above this area right here, and it's a potential breakout play. So you can see how it's kind of ramping up. One of the things that I, kind of didn't realize was that there was really no pattern on this. There was no ABCD pattern, nothing like that. So it was kind of already a trade that didn't have a high probability. I ended up cutting that one for a $52.73 loss. And that was back on the 9th. I just kind of held on to it. I think I ended up kind of on this day for whatever reason. The bubbles that I have didn't really show up. And I just, at this point, was kind of trying to figure out what was different from my past trades versus these trades. Oh yeah, I cut it on the 13th. So I ended up just carrying it over. I ended up buying it on the 8th, carrying it over to the 13th. Which again, just trying to figure out what's going on for my trading from the past and try to see how I can correct that. IRNTWS again was a trade that I ended up taking, and I ended up seeing it kind of down here in this area around the 7th. So it would have been right here. So I ended up buying it on this candle, and for whatever reason, again, the bubbles just aren't showing up. So I ended up buying it on this red candle and ended up holding on to it until eventually the trade worked. The problem with doing something like that is I don't know what's going to happen at all. It just so happened that this trade did end up working. I saw it kind of pull back, consolidating around VWAP, and slowly start to uptrend and uptrend and uptrend. This one was just a really bad example of holding on until the trade actually worked. I started recognizing some really bad habits in the early stages of the month. I do review my trades at least once a week to try to go back to see what I was doing right, see what I was doing wrong. And so as contrast, so to give a little bit of contrast, this right here is my September trading. So the challenge was changed from a $130 challenge to a small account challenge. If you didn't see the video where I mentioned that, some of the different reasons was I grew $130 up to $400. I put a lot of emphasis of what the dollar amount would actually mean as far as my trading. And so once I hit $400, I got up to about 420, 428, something like that. I don't remember the exact dollar amount. But once I end up hitting that, I end up losing a little bit of money. And part of me was thinking, well, I was over $400. I just need to try to make that money back and try to get back over that area that I was at. And that started slipping into really bad trading habits from August. It was pretty much a red month to the $222 loss. July was a profitable month. June was also a profitable month. And June was actually back in late May is when I started the $130 challenge around this week right here. So May, June into July was all pretty good. Nothing really was majorly happening. And July is when I started actually having some slip in discipline. And in July that rolled over into August where that discipline was just not really good. And the discipline just was really hard to get out of. I was trying to identify what was going on. Started trying to identify what I did in the past when I was on a losing streak. And for whatever reason, it was just really hard to actually get out of that mental state of mind. And so in September, looking back at my trades, really watching some over my videos, watching some of the videos that I've also discussed with other traders, I started recognizing some of the behavioral patterns that I was doing in the past and I stopped doing currently. So one of the things that I started doing was from the week of the 5th to the 11th, pretty much this entire week I didn't take a trade. I ended up buying some trades during this time, but I didn't really sell any trades. I wasn't really trading. You can see it here where I was actually taking some trades, and the 7th was actually the 7th and 8th. Those are true trades that I ended up taking, and that would have been from here to here. But I already started recognizing there was some slip in discipline as far as what my trading was. So what I ended up doing was stop trading. I just was holding on to those positions. Whatever was going on was going on. Part of my mental state of mind wasn't really good. I figured, if I blew up the account, I'd blow up the account. If I made money on those trades by holding on to them, that's fine. But one of the things that I started recognizing was in the past, I've watched a lot of traders and they talk about meditation. And I used to meditate pretty heavily like earlier on last year and this year. And every time I meditate, I would have what I would thought would be a mental correlation between trading well versus not trading well. And I never really tracked the meditation. I never really tracked how it affected my trading, how it affected the way that I viewed the charts, and how it affected the way that I viewed kind of loss. And so on the 11th is when I decided, I'm going to start actually tracking the meditations, track when I'm actually meditating. So all these blue areas right here on the chart is where I did meditate on that day. What I try to do is meditate before market opens, before I actually place a trade, then again at night. If I can at least get one of those in, mostly the morning trades, the morning meditations before I end up placing a trade, I end up tracking it. Yellow is basically where I didn't, and what I ended up deciding to do is just change it so that it's blank. So if there's a blank one right here instead of a yellow, it means I didn't meditate on those days. I generally try to meditate on Sunday in preparation for the week, and then every morning before I end up taking the trade. So I ended up holding these two trades from the 17th, the 7th and the 8th, all the way through. And on the 13th, I ended up cutting some of the trades that I had previously. That's where you see that $98.80 loss. That was one of them was from Aagc. I took a 52%, pretty much 53%. The total loss is $122 or $112.30. And There's another trade that I ended up cutting as well. And that gave me a loss in the day. I don't remember exactly what it was. And then IRNTWS ended up being a pretty decent swing trade. So I ended up taking a 36% profit on that one. So $79.21. And I don't remember exactly what it was, but on the 15th, I ended up making $108.45 on the 15th. And because I do actually, track the trades as far as when I buy them, I don't track them when I sell them. And that's maybe something I probably should be doing in the future, is tracking what date I buy and what date I sell. But currently right now I'm just tracking the days that I buy the stock and not when I sell it. So if there's a little bit of disconnection there, that's why, as I don't know when I sold the stock. And some of the charts, especially when you're going further back into the month, it's a little bit harder to actually see them on the chart and try to gauge, especially without my buy and sell orders being appearing on the chart. And I think the further back you go into the month, it actually doesn't show that. So that's why it's there. So I started meditating on Thursday the 16th and the 17th. I either didn't meditate or I didn't track it, one of the two. I'm assuming I didn't meditate. But I was able to actually pull my first winning week that I've ever had, as far as $48.41. I've continued the meditations on the 19th, 20th, 21st. I've taken a small loss. The 22nd, I had 2 trades, ended up taking another small loss combined. 23rd had a small profit. 24th, small loss. And this is where the biggest change started happening that I noticed from the meditations, was that not only did I have my first profitable week, and since 6 weeks time was the first profitable week since even here you can see every single week is a negative, but I had the first profitable week in about 6 or 7 weeks, which was right here. The other biggest difference that I noticed was that I didn't have a problem anymore of cutting my losses or sticking to my trading plan. So one of the things that you may notice was that halfway through the month, my trading started becoming more consistent, more clear, and more risk-reward type of driven, as whereas I actually look at the charts differently compared to the past. And I do think that has to do with the correlation between the meditation. Now, I do actually do a lot of visualization meditations as far as what I'm anticipating in the future, how I actually want to do stuff. And part of that visualization for me is to actually wait for a good setup, wait for either the chart to set up or for me to actually have an alert on it. If I'm waiting for a breakout, to wait for the breakout alert to happen before I actually trade. And just more importantly, stick to whatever the core rules that I have developed. And that's one of the reasons why I think I ended up getting out of that first winning week, kind of breaking the cycle of having consistent losses for 6 or 7 weeks. And when I was starting to trade from the 19th through the 25th, or sorry, from the 20th through the 24th, I was still doing the visualization meditations. I know the strategy that I developed does work. It comes down to just following the strategy. There are going to be times where no matter what you do, the stock that you pick or whatever the case is, it's just not going to work out, and you're going to have a losing week, and that's absolutely okay. As long as over time, you're still sticking to the strategy. And it's really hard for traders, including myself, to stick to a strategy that have consistent losses, to make sure to know and understand and believe that those losses are part of trading. You just don't know what the sequences between wins and losses are going to be. So I ended up sticking to it a little bit more, still stuck to the meditation routine. And I finished off the month with a $93.81 profit. So overall, I ended up profiting $72.82. And one of the biggest trades that I ended up taking that I wanted to share with you. So for my trade on PSRU, it was a breakout pattern. I was aiming for a little bit too much of a profit, and on ICOA, that one was a little bit, I would say, complicated. There was some good lessons in that as far as the behavior wise. Now I still write my trading workbook to make sure I'm actually recognizing behavioral patterns, and I do recommend having a trading workbook with you. Some people that I've also talked to like to just verbally talk out their thought process. Either way, how you do it, whether you're doing it handwritten or through a recording, whichever way works best for you, that's what you'd want to do. So this one on the long-term chart is a former runner, had a nice breakout right here. So if I go back to like a 6-month chart, you can see I had ramp up, pull back, had a break at over 0.0061 or 0.006, kept going up, pulled back, started consolidating, making some higher lows right here. And so I set an alert, so if it breaks out of this area, I believe it was actually right around here, I'll end up, get into the trade. So this was actually on Thursday, and the green line is where I bought it at, and the red line is my risk. So I ended up getting into it approximately, I got into a 0.08889. So pretty much right here. My risk was down here, so I was risking, within that 7% risk target that I was doing. So it was pretty much going below the breakout line again. And I just kind of let it work. And there was a part where it ramped up and it kind of consolidated for a while and pulled back. And as long as it's in between my bracket orders, I was okay holding on to it. It was a breakout pattern, and it's not uncommon for the breakout pattern to retest that breakout. I did have a risk level in mind, and I was mindfully through meditation accepting fully whatever the outcome of the trade was. On this particular trade, if I was to have accepted that the risk, and if it did get me stopped out, the total loss would be at 6.29%, so $8.74. So I'd be losing approximately $19, including commissions, because my commission structure is $4.95 per trade. So $4.95 is $10 pretty much, rounding up to $19. Generally with the OTCs, I don't scale out of the trades like I do with NASDAQ. The biggest reason on that is commissions. As my account starts to grow and I start to take a little bit larger of a position size, I will start to scale out of the trades. But right now with commissions, if I was to scale out of this one, I'd end up taking probably like 20, 30 bucks from it versus, being able to take the full size move. So on OTCs, it's pretty much an all or none type of a thing. So I want to make sure that my statistics, my data, and the way that I'm trading it coincides very, pretty well as far as what I'm aiming for. So because of the PSRU trade where I somehow went just slightly outside of the data that I was running, and the percentages of that, I was aiming for 60%, and it moved my sell target for a total of 66%, and it was, barely missed my sell, and ended up taking a small loss on that one of negative $5.42. And there was a potential for a $152 profit. That was kind of frustrating, of where I could have had a profit, could have had a great profit on the day, and just decided not to because of it, just a mental state of mind. So where I ended up buying it at, the 40% target that I was aiming for should have been right around here at 0.0266. And I had it going for, again, 60%. So I was looking for a 60% sell target, and I wanted to take that full move. And it was around this candle right here where it started ramping up, pulled back. And as it was starting to go up, I was thinking, okay, volume is, starting to come in. It's later on the day. The potential of it continuing going on is pretty high. And in my mind, I was already starting to, think more about with money. I was starting to already trade the amount of money that I was making, or more along the lines of the amount of money that I could be making in the future versus trading the system. And for the breakout patterns on the OTCs, you can see here, it's a 54%. So basically on both PSRU and on this particular trade of ICOA, I was inadvertently going outside of the range of the data, even just by a little bit. I mean, even though it says it's 54%, I should be rounding that down to 40. So when I retest this area, that's when I started snapping out of that kind of expectations what I could be making, and trying to trade this as well as possible. And so I ended up taking the trade-off. But as I was starting to go down here, that's when I started having the real realization that I was starting to slip back into old habits of anticipating a move and trading off of what possible outcome I could have based off of what I think the market's going to make available to me. So what I ended up doing is just placing an order here at 26, and I figured, I had a nice dip as it started coming back up. I did see a huge seller around 26 for around 1 million shares, and I thought there was a potential with how small this account size or how small the position size I had, that if it got up to 26, I had a good chance of getting a fill. If I did have a larger position, I want to be kind of a little bit lower or other things just to get out. But my total position size on that trade was 7,354 shares. So it was a very small, like $140 position. And one of the things that I'm proud of is the recognition of, what I was doing, and I wasn't trading as far as the data. I was trading my system, I just wasn't trading the data properly. And so I ended up getting out here at 26 right before market close. And that was a total of 37.59%, so pretty much a 37.5% profit. Now, I could have actually held on overnight and gone that full 30%. Only missing about 3% isn't that big of a deal. The biggest thing that I learned from this trade was, sticking to the actual profit target. 40%. I'm risking 7% for the potential of making 40%. To me, that's a good risk to reward. It is a nice clean breakout pattern. And a lot of breakouts that have been happening on OTCs haven't been continuing on and continuously running. This is something I do want to keep on watch as far as what the potential is. It could come down and start to rebound and go back up again. But as you can see, it ended up just breaking out, pulled back, and just did absolutely nothing for the rest of the day. So I was looking at it as, potentially that I could gap down, and because I was looking at it more of a, this could be a risk of me holding on overnight and seeing if it's going to reach the higher amount. What I didn't want to do was try to get back into the state of mind of going, well, I anticipated going up higher than 40. It's already, kind of closed near its highs here. I'm just going to get out, take the profits, recognize the problem that I did, and move on from the trade and just try to stick to that. The other thing is after this particular trade, right here is the bracket orders that I have set up. And previously I had a list of, probably 10 or 15 that I'd have that would go all the way down. And I kind of choose which one I, was going to do based off of what I thought potentially could happen in the market. And what I recognized was that some of the bracket orders were not going with the actual data that I had. And there was a part of me that would, make you trading errors subconsciously by selecting the one that I wanted to happen versus the one that would fit the actual data. So what I did is I actually removed every single one of those except for the ones that I wanted to start trading. So with the bracket orders, I can only enter into it with these two. On this particular trade, I end up, buying it right here somewhere. And because of when I first tried to enter the position, I was trying to do the math, and I didn't get a fill. And I knew that this had to go to potential of actually breaking out and continue on. So I wanted to get into the trade. I wanted to get into it as long as it was around this area because risk reward was still there. So what I wanted to do was buy it no matter what. And every time I tried to do the math, it was pretty early and I still was trying to wake up. I ended up buying it on my phone and placing bracket orders later. Yeah, so in this particular trade, I didn't set the bracket orders until afterwards. So I knew that there was a good chance of this having a clean breakout and continuing on. And I wanted to get into it. So when I was doing the math on this with the calculator to see how much share they can get based off the dollar amount minus commissions, it was just going up a little bit higher. And I wasn't sure if there was going to be a pullback, if the pullback was going to be a little bit further on. And as soon as the market opened, I ended up getting us alert within 2 or 3 minutes, maybe even less. And I just wanted to get into the trade. So I ended up placing the buy order on my phone and ended up placing bracket orders later on. So I didn't actually get a chance to even use this new thing right here. And if the chart says that there's less than a 7% risk, then I will end up, moving that risk target up higher. So that way I don't have to take a bigger loss than what's necessary. But I did make these two right after I started recognizing the mistakes that was having. Was subconsciously I wanted more money, so I was selecting the one that was having a higher price target. And by eliminating the that type of temptation by removing those from the bracket orders, I'm hoping that will actually give me a better chance of just selecting the right one over and over and over again. Now with scaling out of an OTC trade, personally, I think if you have a $500 position, you know, taking that $20 and you know, scaling out of that $20, like if I was aiming for 40%, I'll be taking half off at 20, the rest off at 40, and making sure that you're taking some sort of profit on that. Now, the only problem with the OTC when you're scaling out of it is if it does hit your wrist, that acts as two separate type of buys. So you'll be getting $10. Well, you'll be taking you know, depends on your commissions. You'll be taking one commission loss based off of just the buy, and then another commission loss just based off the sell. So that'd be basically 3 different types of sells. And if it goes up, you'll be taking 3 different commissions. So a potential of $15 for the potential of making much more. So as my account grows, I will be scaling out of these trades when I'm trading a little bit higher price versus when I'm trading currently. I just have to determine whether or not my account size is large enough to do that with, or if it's something I want to do. It also determines whether or not the OTC trades are, you know, kind of worth trading in the future. I know there's some regulations. I want to see how the market reacts to that. But this is probably the best trade I've done for a long time, as far as making sure that I followed my plan, recognized what errors I was already creating, and making sure that I recognized that and corrected my mistake pretty quickly versus waiting until something else happened. And one of the things that I want to know is, you know, leave a comment below. Have you guys ever recognized a mistake, and were you quick to react to that mistake? Did you ignore it and just kind of hope for the best, or did you recognize your mistake and react to it in a manner of, you know, getting out as quickly as you recognize that? That'd be a great thing to know. Leave a comment below. If you do like this content, subscribe to the channel, ring that bell for any new notifications, and we'll see you next time. Thanks for watching. Bye.